China is getting stricter with their financial laws. As a result, many of their real estate developers are finding it hard to continue to operate. Last week, Bloomberg published an article about 3 critical signs that Chinese companies are on the verge of some big financial factors. And here's the 3 factors. The property firm's liabilities is more than 70% of assets. No debt is higher than exceeding equity, and cash should be at least equal to short-term borrowing. Just as what Evergrande incident has proven, Chinese companies don't necessarily affect the US economy or the market. However, it reflects on how speculative the market is, and the risk doubles when you invest in foreign companies. These companies are not ruled by US laws and regulations. That means if you invest in them, you're betting money on companies that could be employing unhealthy business practices and you won't even know it. You can invest in foreign companies using ADRs or American Depository receipts. They're a convenient way to buy foreign stocks. Foreign companies use ADRs to establish a presence in the US markets and sometimes raise capital. One example is the e-commerce giant Alibaba, which raised $25 billion in 2014. I'm not going to go into detail of that. That's for your financial advisor about the pros and cons. But if you invest in an ADR, there's still some risks that we should talk about. Number 1, there's a political and socioeconomic instability. Countries experience political, social, and economic turmoil from time to time, which often affects their stock markets. Such issues make foreign stocks hard to track. 2, you have liquidity issues. In some countries, stock markets may not have as many buyers as sellers available than the US and may not be ready to trade when you are. Markets may be limited with trading hours, volumes could be low. Number 3 is, and this is the biggest one, limited information. The rules regulating the data companies must publicly report are not standard in the whole world. It can be risky to purchase stocks in a country where business financial information is inaccessible or dishonest. Number 4, stock market regulations. In the US, investors enjoy the protection of the SEC against fraudulent activity. You may not have similar legal avenues when trading in international stocks. Now, many foreign companies have proven to be profitable investments. It's always something you can consider, but it should also be part of a well-balanced portfolio. And that portfolio should include retirement accounts, crypto, bonds, stocks, and of course a hedge of gold, which has always been the best one. If you want to discuss your options on how you can hedge your risk with gold, call us 877-646-5347, or you can just go to the website if you don't want to talk to anyone, download our free investment guide at noblegoldinvestments.com.
If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open and we're happy to answer any of your questions.